Hi, welcome to this video date, which is on the 9th of June. We're on Wednesday. We're just going to look at the advantages of trading exotic or emerging market currencies today. Now, most traders tend to stick with the majors or the major crosses, but the lesser looked at pairs can offer you enhanced profit potential on your trading strategy. Why? Well, the emerging markets very volatile. You do get good trends, and if you've got a sound forex strategy, it should work on any pair. Okay, so the more pairs you look at, the better. So we'll go through the advantages of trading exotics and emerging markets in a little bit more detail in a moment. And I also want to look at a pair that we're focused on right now, which we think offers really good risk to reward potential. It's the strongest currency against the USD over the last 3 months. It's the South African Rand. So we're going to look at USDZAR. Now, what we will do is we'll go and take a look at the chart and go through exotic currencies in more detail. But just before we do so, please do keep in mind, it is my view as of right now. It can, of course, change in line with market action and conditions. If you want our trading strategy, all our trading techniques and our daily technical sentiment analysis of 14 forex pairs, including the one we're going to look at right now, all you need to do is click on the link beneath this video and you can get live access to our member center. You can also join our Facebook group of traders, follow us on Facebook, and also check out our recommended regulated ECN broker. Right, let's go over and take a look at the chart. Right, we're on the USD/ZAR daily chart, and you can see it's a really big move to the downside. So a really nice trend, and we've seen a little bit of strength. We're looking for a big trend reversal to the upside. Before I draw my levels of entry, stop and target, I just want to go through some general points in terms of emerging markets and also what's going on in the USD/ZAR with speculators. Now, in terms of emerging markets, other emerging market currencies would be, for example, the Mexican peso, Russian ruble, Turkish lira, and basically they're currencies of countries that have not got advanced developed economies. Okay, so they tend to be more volatile. Okay, so they're very attractive when you've got global economic expansion, but they're not attractive in terms when you get global contraction. Risk on makes them attractive, risk off doesn't. They've normally got a higher interest rate as well, which obviously makes them attractive in expansion periods, and they need foreign capital, okay, to develop their economies. They normally have high US debt, okay. So in terms of the emerging markets, you can see on this chart it's a really good trend. It is a volatile pair. Now, you do pay a higher spread, okay. Obviously, these currencies, the emerging markets, are not as liquid as the majors, but the spread itself, you can get really competitive spreads, which won't really impact upon your profit potential. Okay, now there is, in terms of brokers, quite a bit of variation in terms of the pip spreads they charge on emerging markets. They're all pretty close in terms of the majors. So you want to get a broker who will offer you good spreads. The recommended broker that we have got linked to under this video will give you not just good spreads, but also a wide variety of emerging markets to trade and exotic currencies. Okay, now in terms of USD/ZAR, obviously we've had risk on in the market, and this has seen the USD fall hard. Okay, now in terms of the USD falling, the Fed has low rates and heavy stimulus or high stimulus printing money. So that makes the South African Rand very attractive. Not only if you sold it, okay, would you pick up capital growth, okay, for the move down. You'd also get a nice interest rate carry, 3.5%. Now, in terms of tomorrow, the key event is US CPI. That is inflation data. Now, the market doesn't see the Fed, tapering back their stimulus or raising rates anytime soon. Okay, now if the inflation data comes in above forecast, which we think it will, we think that brings forward cutting of stimulus and rate hikes and will trigger a correction in the oversold USD. Now, in terms of the CPI data. You go to my Facebook page, I've done several posts on this, why we think it's going to come in above forecast and what the likely reaction will be. In brief, the likely reaction will be the USD will go higher. Okay, and in terms of the USD, mounts a broad-based rally. It's the emerging markets that get hit the hardest. So what you've got is a lot of speculators short at the moment, a lot of carry trades in the market, specifically there for the interest rate differential, more so than the capital growth. Okay, and they'll tend to have tight stops. There's plenty of them short, and we're looking for them to get run out on stop. Now, in terms, I'm just going to draw my levels, but in terms of using no leverage at all, just trading, cash. Okay, the risk on the trade is 2.29. Okay, first target will give us 6.56. Second target 9.58. Obviously, if we get there, so it's an attractive risk to reward trade. Let me draw my levels. Now, this was a favourite trade of mine just over a week ago. When we rolled over here, we got that candle there, and I went for a reversal. She faded back, and I got stopped out. She ran onto the downside, and in the member centre, we did a very aggressive entry just through there. Okay, and up she comes, and we got the previous loss back. So hopefully we can get more of it back. We're a little bit in profit overall in the last two trades, or the two trades we've just done. Now you can come in fresh to this trade. I'll show you where in a second. I'm just going to draw a trajectory. So you've got three higher lows. Okay, 1, 2, 3, and this is the nice blue candle. Okay, now in terms of you want to come in fresh, this 20-day moving average here. Okay, basically really held price on the way down. You did poke through it there and then came back. Okay, got through it there, tried to stay above, came back, looking for it to get through and really hold the level due to the dollar's oversold condition. So there is your level. Okay, if you're coming in fresh, 1380, just get clear of that 20-day moving average. If we're right and there are stops behind this level, we should see them hit and we should move away quite sharply from the level. Now, in terms of, from our perspective at the moment, our stop is back here. But if we break out, and this will be for fresh positions, put it straight below that low. Obviously, that nice blue, we could trade it up maybe behind there. Okay, so look for this level to break and see if she runs, then you can pull your stop up. Where could we go to? My own view is the dollar is so oversold, we could go to 1460. It's a big level here. It's where you pushed off, kind of found support around, down, tried to get back above, down, nearly got there, couldn't. Okay, but if we break there, we could go up to 1460, and longer term we might even run on to 15. So the USD, just very, very oversold. She's shown some strength, just looking for the breakouts and looking for good follow through. Obviously, if you didn't get good follow through, you could always freeze the trade out. Okay, in terms of emerging markets, exotic currencies, most traders don't bother looking at them. But if we look back over the last year, the trade that gave us our biggest percentage gain was selling the Turkish lira. You can go and look at that chart. They're well worth having in your portfolio. Like we've said often in our videos, the more pairs you've got to look at, the better, the more good trade setups you're going to find. I really like the look of this pair. It did catch me out on the last trade. I was pretty confident that's the way it goes, but got that loss back a little bit more, and now looking for a really good move to the upside. We shall see what happens, but go and check out my Facebook page on the CPI, and you'll see the logic of why I think we could have such a surprise in inflation data and a big reaction in the USD. I think the USD could react against near enough all major currencies. The emerging markets will be the ones that I think will get hit hard. So I like the look of this trade. Right, that is the video for today. Thank you very much for watching it. Take care. and have a good day.